All right, so good morning once again. Good morning and welcome to this training. My name is Reka Banobo and I'm the administrator of Evijet Academy. So this is actually a fast track training. So welcome to the fast track online Forex basic course. Now, why did we call it fast track? Fast track in the sense that is a jump speed, all right? Trying to give you the foundation and at the same time be quick and fast about it. Going straight to the point, the basic things you need to know, all right? So there are things that you don't really need. You know, most times when we do this training, we try to break down everything from history of Forex and all of that. So let's go. Now, take for instance the history of Forex. Okay, I think I need to do something. Okay. Okay, so take for instance, okay, so let's look at the course outline. Let's look at the course outline. Now, the history of Forex. We are not going to be dwelling on history of Forex because you can get the history anywhere, anytime. So we'll just skip through that. Basically, what we'll be doing today is currency pairs and other trading instruments, all right? Currency pairs and other trading instruments. We may have time to go into the trading session. We may also have time to look into price action. So, but Forex, history of Forex is also part of it. So we have candlesticks. Now, in the Forex market, in the general online market, basically the global financial market, we're actually looking at candlesticks, all right? Because the candlesticks tell us a story about what is happening in the market, all right? It tells us a story of what is happening. And looking at the candlestick, you can get some history about what has happened in the past and what is expected to happen in time to come. So that is why candlesticks is very important. You understand them, you understand how they work and what they stand for. Then we also have support and resistance. What is support? What is resistance? You'll be learning all of this in the course of the journey. We have pullbacks. All right, pullbacks. You pullbacks. Okay, we have pullback. We have reversal. We have trends. Okay, we have trading window. Now, what is trading window? Your phone, your MT5 that you are trading with is the trading window. So there are some things you need to learn and need to understand in the trading window. Now we have pending orders. We have instant orders. We have stop loss, take profit. That's we're talking about entries and exits. Okay, we'll be talking about analysis. So we have different types of analysis. We have three basic types. Okay, fundamentals, technicals, and fundamental, okay, technicals, and which other one? We'll get to see that. Then how to draw support and resistance, how to draw a trend line. Then we also have confirmation checklists, then intermediary, that is the intermediates, okay? Intermediates, we have introduction to C trader. We won't be doing C trader on this course. We will be doing C trader because we are not using C trader here, okay? C trader is a different trading platform, okay? And I also train on C trader as well. Full C trader navigation, desktop and mobile. Then a beginner's trading strategy. So one of the things you really get at the end of this training is a strategy that I'll be giving to you for free, that if you stick to that strategy, you should be able to use it and make money. Now, every strategies have rules. There are rules, there are conditions for every strategy. As long as you are able to maintain those conditions, make sure you confirm all conditions before you enter into a trade, you should be able to make something from the market, provided you obey the instructions, the rules, and align all conditions to be met. All right, so let's go straight to what we have next. Okay, so like I said about the history of Forex, we are not wasting our time looking at history of Forex. So it actually started with the battery system. What is battery? Trade by barter, exchange of goods and services. So you give me cowries, I give you yam, I give you food, give you that exchange. So you give me something, I give you another thing, is exchange. Then the commodity system, okay, cowries, cocoa, shekel, yap. Then the coin system, you know the coin. We used to have coins here, even in Nigeria, but our money is too big now, so coins are no longer traded. So we have the coin system, which was made from electrum. Then the paper system invented by the Chinese, started with the Chinese. We call it a certificate or note represented in the gold store. So they actually gold, all right? They have gold in store, but there is a certificate issued as a paper that you can use to buy, you use it in exchange. So the gold is somewhere, but it is somewhere, someone who have that paper money that can actually go to the gold store and claim gold worth of that paper money he or she is handling, all right? Then we have, say all currencies were backed by gold. The same thing we are saying. So that your paper, that your money has a gold value then. So you can take it to the gold store and exchange it for gold, or you want to hold the paper money so that you can be using it. So we have the Bretton Woods system, which is what we are still using till date. And USD was chosen to replace the gold as the world currency reserve. Okay. So world currency reserve managed and governed by IMF. Okay. IMF lend monies to country who needs money to keep them from printing their own money. So that's the history. Then the World Bank, okay, okay, we're still doing it gradually right now. So they lend money to the new developing countries that want to expand and improve their infrastructure. Floating system, it is not backed by any currency or anything of value. It is not influenced by the government's demand and supply govern the Forex market. Participants include, okay, so the floating system is the Forex market, right? Okay, so participants includes England, USA, which is the USD. England is GBP, then the USD, the Eurozone. Eurozone is Euro, that's what they use. Then the Canada is that's the Canadian dollar. Australia is the AUD, Australian dollar. Then we have the market participants. Who are the market participants? That's the people who actually participate in the market, who trade in the Forex market. So we have the government. The government actually dictates what happens to the currency in each of their countries when it has to do with interest rates, all right, cutting of rates and increasing of rates and all of that. So that's the government. Now, what's the infrastructure managed by governments? All of that actually are from the government aspects, and they affect the currency. So we have the central banks. Every country has a central bank, all right? So the central banks, they participate in the Forex market. We have financial institutions, the banks, the banks and other institutions, okay? Those are, then we have hedgers, all right? Hedgers are companies who hedge, we call them the hedge funds. Then we also have speculators, then retail traders. Who are the retail traders? You and I, we are the retail traders, okay? Now, the retail traders are actually below 20%, okay? So the transaction that the retail traders, you and I, do in the market is below 20% of what is happening in the market in terms of participation, okay? So people like us, we use proper risk management because we do not detect what happens in the market. We don't understand. We don't know where the market is going to go. That's why we need the knowledge, all right, of the history that the candlestick tells us about the market. Then we'll work with the fundamentals while applying proper risk management. Okay, we're going to get to that. Okay, do not try to predict the market. We don't predict the market. We just work with what we see, speculating direction based on the market structure and available fundamentals. So that's what we do as retail traders. So what is traded in Forex? Okay, what is traded in Forex? What is traded in Forex? Now, what is actually traded in Forex is currencies, okay? It's currencies, okay? Now, foreign exchange. The word Forex actually is extracted from, is an acronym, if you may say, from foreign exchange. So it's actually exchanging one currency for the other. If you have changed money from Aboki before, you've gone to Aboki to change, maybe you received dollar or pounds from someone abroad, and you go to the Aboki to change it. What you have done is you have participated in the Forex market, the foreign exchange market. But in that case, what you are doing is a physical exchange. Is not the online that like we are talking about here now, where you need to participate from anywhere without having to go to those countries. But this one we just talked about now is physical, but in that case, you have participated. Now, one beautiful thing about the Forex market is that, okay, you who is trading, whether you are buying or you are selling, you are making money. Whether you are buying or selling, you are making money. Please, let me understand if you can hear me. If you can hear me, please put in 222 on the chat box. I need to be sure that I'm not talking to myself. 222 on the chat box, if you can hear me. 222, just to confirm that I'm good, good. Okay, good. I just wanted to be sure because sometimes you may be talking and you think that people are hearing, but nobody's hearing you. So I just wanted to be sure of that. Thank you so much for confirming that. Okay, so now in this, apart from Forex, Forex, in the global financial market, we have a lot traded, all right, as in the market. Okay, so Forex is just an aspect of it, which is the foreign exchange. So we have commodities, all right, we have commodities, we have stocks, we have synthetic indices, we have a lot that is traded in the global financial market, all right? But Forex tend to be the loudest, okay, which is the primary and the oldest. So that's why Forex is the name in the forefront, okay? So now we are looking at currencies presently. We are looking at currencies. So what are the currencies traded in the market? We have the Euro, GBP, AUD, and AUD, NZD, USD, CAD, CHF, and JPY. Please take note of those things. This is where the learning starts. This is where the learning starts. Now, when we talk about foundation, basic, this is the basic we are talking about, okay? So this is where it starts. Hierarchical order of currency. Now, what it means is that is the order of currency, okay? Which one is the one on top? Look at the language, hierarchical, hierarchy, hierarchical order of currencies. Okay, so we have the Euro, which is the number one. Then we have the GBP, we have the AUD, we have the NZD, we have the USD, CAD, CHF, and JPY. So that's the hierarchy. Now, one thing you must note is this. The hierarchy is just for nomenclature. It's for naming purpose, okay? It's for naming purpose. The hierarchy does not mean that it is the strongest currency. That Euro is on top does not mean that it's the strongest currency. That GBP is the next does not mean that it's the strongest currency. But what it simply means, this is just put together for orderliness, okay? And it's for nomenclature purpose, all right, for naming. because what we are looking at here now are currencies, but there is a combination that makes them currency pairs. All right. You can't sell and buy one currency. For it to be traded, it has to be a pair. So every currency is paired with another for it to become a pair, and that is when it's tradable in the Forex market. But there is an order in which this pairing is made, and that is what this hierarchy stands for. So this hierarchy helps you in noting the order. So let's further look at the currency pairs. So currency pairs, a combination of two currencies with one bidding and the other asking. Okay, one is selling, the other is buying. That is just simple language. Okay, you took your dollar to Aboki, all right, to sell. What you are doing is you are bidding. Okay, all right, why the guy buying is asking. So that is what it just stands for. Just the simplest way to understand bidding and asking is who is buying and who is selling. It's as simple as that. Okay, so now before we go further, let's look at something about the currency. Okay, no problem, we'll come back. So now look at this language. What is traded in Forex? What is traded in Forex? What is traded is currency pairs. Like I mentioned earlier, what is traded is currency pairs. All right. So now, and each of these currency have their level of participation in the market. Now, USD is the most traded. Why? Because it's the most paired with every other currency. Okay. USD is paired with almost every other currency, so it's the most traded in the Forex market. Okay, USD is the most traded. So USD has 85%, then Euro is the next at 39%, JPY 19%, GBP 13%, AUD 8%, CHF 6%, Canadian dollar 5%, then others are 2.5%. These others is where you have the Nigerian Naira, the India Rupee, you know, name all the other ones you know, those ones fall in this other 2.5%. Okay, so now there are things that affect the currency market, all right, that makes the price fluctuate, goes up and down and all of that. So what are these things? Now, things that affect the economy, all right, includes politics. Now, we just finished the US election and Trump won. Now, for those of us who have been in the market, we know exactly what has happened, all right? Now, Trump winning actually gave some strong level to the USD. Now, the USD has some strength, okay, as we speak. USD. That now, for those of us who are in the crypto space, we know exactly what has happened. So that is fundamentals. All right. So these fundamentals, there are things that actually affect them, which also we can also call them things that affect the economy. So the politics, interest rates, natural disaster. Now, natural disasters is like the tsunami, all right, hurricane this, hurricane that, and all of that. It affects the economy. And when that happens, it in turns reflects in the currency. So let's assume we have a tsunami in somewhere in the USA. You know that one will dwindle to have a shake in the economy, and you will also see it affecting the currency as well. So these are the things. So we have also terrorism and war. Okay. There has been war in Gaza, Israel, and all of that. It has a lot to do in the Forex market. The same way the Russia and what do you call them? Their war started since last year, okay, until now is still wavering. So there has been serious effect in that regard. But you should be able to understand how to place this, you know, to know which side to tilt to that will favor you in the market. So these are things that affect the market. So let's look at types of okay, I didn't mention unemployment, export, and import. All of these affect the economy, either positively or negatively. And when it's positive, it's good for the currency. When it's negative, it's bad for the currency. Okay? So now let's look at major currency pairs. So we have major pairs. We also have minor pairs. And we also have exotic. Now, someone may say, I'm fast. But the truth is that you need to visit this thing again and again to get a better understanding. And you also begin to write as we speak, so that when there is time for question, you ask all your question. We'll go back to all of this, and you ask your question. We'll try to break it further down for you to understand. And in the course of doing that, many other persons are also getting a clearer understanding as well. Okay? So what are major pairs? Okay, now it's a simple to say those that contains USD, not all the currency that contains USD, but the 8 major currencies that contains the USD. Now let me show you the 8 major currencies again. Now I showed us these are the 8 major currencies traded in the world. Euro, GBP, AUD, NZD, USD, CAD, CHF, and JPY. These are the major currencies, all right? And this is the hierarchical order. Every other currency pair is generated by adding these pairs, either of these pair to them. Every other pair is generated by adding each of these currencies to them. Okay, so let's go back to where we were. Okay, so I said the major pairs are the major currencies paired with the USD. So let's look at the major pairs. The first one is the Euro USD, USD JPY, GBP USD, USD CAD, USD CHF, AUD USD, and NZD USD. It's as simple as ABC, okay? And each of these currencies, they actually have a nickname, okay? Although all these nicknames are just for formalities, I don't really look at them, but you want to know them. So the USD is called the Euro dollar. Then the USJPY, the Euro USD is called the Euro dollar. USD JPY is dollar yen. GBP USD is called the pound dollar. Then USD CHF dollar Swiss, USD CAD dollar Roni, USD AUD USD Aussie dollar, NZD USD Kiwi dollar. All right, all those are just nicknames, but what you need to know is these names: Euro USD, USD JPY, and the rest. So now let's look at the minor pairs. Let's look at the minor pairs. Now, say those that contain the JPY except USD JPY. It's simple. Now, USD JPY is here as a major currency, but it's not a minor currency. Now, every other major currency that is paired with the JPY, the Japanese yen, is termed to be a minor pair. Okay? So now let's look at the minor pair. Now we have the Euro JPY, GBP JPY, CHF JPY. Okay, this one is not complete. CAD JPY, NZD JPY, and AUD JPY. So these are the minor pairs. These are the minor pairs. Now we also have the exotic pairs. We have the exotic pairs. So any major currencies that is paired with an emerging economy is called an exotic pair. Any major currency that is paired with an emerging economy is called exotic pair. So you already know the 8 major currency: the Euro, GBP, AUD, NZD, USD, CHF, JPY, and CAD. Those are the major currencies, all right? And The emerging economy are the one like the Nigerian Naira, the Russian Federation Ruby, then South Africa Rand, South Korea Krone, Won. Then we have the Hong Kong dollar, Mexico Peso, India Rupee, you know, Singapore dollar. All of these are emerging economy. And that's the same place Nigeria falls as well. So when you say USD NGN is an exotic pair, USD ZAR is an exotic pair, USD Ruby is an exotic pair. So these are how to combine them, okay? These things are primary and they are very key to your success. You need to understand them. You need to understand what it means before you progress. But if you just keep these ones, you will never understand. When you see them, Euro, JPY, USD, this, they'll be looking like French to you. But frankly, if you have the understanding from the beginning, you will know how to work with them. All right, so major currencies. Okay, yeah, so let's say advice column. Say treat currency pair like dating or cotton. Now, when you want to start trading, you don't trade everything. You should have 2 or 3 that you trade. You need to, because one thing about the market is that if you really study a particular pair, you will know how the pair moves. You will know when it's trending up and when it's trending down. You will know each level of support and resistance because you will understand the behavior of that pair. But if you are open to trading all whatnot, you may not be focused. So that's what this thing is trying to say. Say, treat trading currency pair like dating or cutting. So when you are dating or cutting a woman or a man, you know what that means. So you want to stick to that man, you want to stick to that woman so that you understand him very well. So that is what this thing is just trying to reference. Say, pick a few currency, not more than 3 to 5 pairs. Study only those markets until you become familiar with how they act. Keep track of what they do. Keep a trading journal, all right? So these are just ways for you to be able to master and maintain, okay, particular area. So right now, I don't want this video to be too long. So I want this video to just pause here and I'm coming. I want this video so that we can ask questions. Let me stop the recording rather. Let me stop the recording more.